the contraction was 2.2%, the final reading of the first quarter. The question that comes to mind, we expect at Bloomberg a contraction of around 5% in Germany, but we're looking at a stimulus of nearly 8% of GDP. Is the remedy big enough for the pain of contraction?
Yeah, well, first, good morning. I think what we need to expect is that in the coming month, and especially the second quarter, the pain will be extremely deep on the German economy, as in many other European economies. At Saxo Bank, we expect the contraction in the second quarter could be around 7%, which is already kind of huge compared with other crises. And for the whole year, we expect that contraction should be around 8%. But at the end of the day, I think Germany will cope with the economic situation much better than much of the other European countries, especially France or Italy. I think as a matter of fact, what we know is Germany has implemented already a massive stimulus. They are discussing another step in terms of stimulus, which is a good news. And at the same time, we know that the cooperative management model in Germany, meaning that they deal with workers, employers are working all together, is usually a good way to protect people on the economy. So I would say overall, I would be much more optimistic for the German economy than for any other European economies this year.
The narrative, the €500 billion stimulus package that is being debated about how to get Europe up, running and recovering. The frugal four, as they're referred to, are talking now about, that's Austria, Denmark, the Netherlands and Sweden, are talking about a time-limited emergency fund. The narrative has shifted from the Austrians. Do you take heart from that? Is that part of the reason why we're seeing perhaps a substantial response in markets this morning?
Yeah, I mean, I think everyone over the weekend read the non-paper from Austria and the other northern countries that are against the Franco-German proposal. As a matter of fact, this is bad news. We know that it will take a lot of time before we manage to handle the economic situation. And if we have an Europe that is divided between France and Germany on one side, but are backed up by Italy and Spain because they all understand that we need further stimulus. And on the other side, we have Austria and the Netherlands especially that don't want to move forward. I think it will be extremely tricky for the European Union to be one of the economies that will perform well and will exit the crisis quite fast. My biggest fear is that we will end up in a lot of political bargaining in the coming weeks, but it will have a negative impact on the economic situation because, as a matter of fact, it will take longer to recover than any other countries, especially even the United States, I think, or the United Kingdom, because as a matter of fact, once more, we have... Yeah.
Look, you look at various moments in history, whether it was Europe raising rates into a crisis under Trichet. I mean, splendid moments of misunderstanding the situation, from Lehman's to Trichet, a whole variety. Europe doesn't have, the world doesn't have time to really prevaricate endlessly about what needs to be done, does it? And Europe certainly doesn't.
Completely. I mean, we know the situation on the ground. We know it will get worse before it gets better. And we know that on the political level, we need to tackle the economic situation quite fast, meaning that Germany and France, but also Austria, Netherlands, needs to find an agreement and needs also to have a fiscal package that is big enough to tackle the economic situation. The problem with the European Union is always the same. There are too much political noise, too much political discussion, and the unanimity rule is also one issue when you want to move forward fast in a period of crisis.